this is how it should work. John Joe, I don't know his resume very well, but it's very important. He is important in the insurance business. He knows his stuff. I would certainly reinsure with him if I had enough money. And he's done sterling work as a leader with senators and senators' aides, and as an expert in insurance. So,
Thank you,
go
John.
get him, sir.
Appreciate it. I didn't take your money, so, because we only insure commercial and industrial properties. But anyway, so I've worked for 33 years in the insurance industry. I actually do the loss prevention evaluations of industrial facilities, commercial buildings. So I do the loss prevention side. I rub elbows with the underwriters, and they're always pulling their hair out, and, cursing at me. And it's like, it's got to be better than that. I'm like, no, it's not better than that. But anyway, they take my reports and try to make a rose out of some pretty bad risks sometimes. But so anyway, I went to school as a chemical engineer, so they send me to a lot of chemical plants. To me, climate change is heat transfer, a little bit of physics. I think by the time I was a sophomore in college, I better have had that down. So I don't understand why even a lot of engineers can't wrap their brains around it. But anyway, so what I'm going to talk about is the property insurance impacts, mostly in the United States, which is most of my experience, to these natural catastrophes, NatCats. I might fall into my little jargon that we use, but that's what we call these events. And we're going to kind of concentrate. This took me the longest time to come up with, I'm supposed to tell you what I'm going to talk about, right? Second slide. And then I realized, oh wow, my thoughts are not organized. But anyway, so this is what I hope to cover. Who pays to repair the damage? There's all these lists down here: private insurance companies, federal government, FEMA, the National Flood Insurance Program, state and local governments, charities, citizens and business owners. And then how do we minimize the impact? And I'll be kind of covering the different organizations and the different ways we can try to make ourselves, our country, more resilient to climate change. Because things are happening already. They're going to get worse, and the way Clinton explained it to me, I realized, wow, there's so much carbon dioxide absorbing into the ocean that it's good. Yeah, Clinton Boyd, and he's a PhD chemist, and I was like, wow, okay, now I'm really scared. Anyway, I've looked at these because we're talking about geekdom. I'm a Weather Channel geek. I love the Weather Channel. I watch a lot of these, and then I'm looking at these statistics on, if you go back to Sandy, you can look at what the estimated loss was, what was actually paid for by different insurance, governments, what have you. And I find that only about, at least on initial estimates, only about 30 to 50% is actually covered by insurance for these things that happen. So when people say, oh, well, a hurricane, it'll get paid for, it's good to get money into the system. Well, I don't know. I think there's some people left hanging without coverage, without flood coverage especially, and we'll talk about that. And then the federal government picks up a lot of it. So it's not a good thing. People lose, companies lose. Insurance does cover some of it, but it takes years to recover from these things. And this was just a picture I found earlier today. And the repairs to this bridge outside of Houston, or somewhere in Houston, they're not even going to start on it until early 2018. So maybe they'll end up with a bridge that looks like I-75 near Saginaw, where they took it up and over because it got flooded like this, so they elevated it. but there's a lot of infrastructure at risk. So our property insurance providers, hey, most of them are for-profit companies. They don't want to, they're reporting quarterly to their stockholders, like any company. Management must be able to predict their earnings, their losses. When Katrina and Rita hit, I know our managers the story was they were high-fiving each other because we only lost $800 million and it could have been $1.5 billion. So they were like, that was their prediction, worst case. So they really, the reinsurance market is purchased, so that's, insurance companies buy reinsurance and they don't buy it to be profitable every year. They buy it to give them a little more cushion in case these huge events happen, that they're not going to, use their entire nest egg or use a huge portion of it paying off the losses. So these catastrophe reinsurance policies kick in and absorb some of the loss. I've been kind of surprised. I've broached the conversation with several of my clients this year, just recently, and they were surprised to go, "Oh, you guys are losing money this year?" I go, well, yeah, we're all losing money. I mean, I don't know of if you don't have anything in the Gulf Coast, maybe you're not losing money, but anyway, again, the reinsurers are, like Lloyd's of London, they have huge sums of money, usually invested in the stock market. We must maintain this readily available cash to pay for losses. That's at least a U.S. law. And our performance expressed in a combined ratio. So we take our losses plus our expenses divided by the premium we take in. So if it's 1.0, you're breaking even that year. It's a simple math formula. If you're 1.2 or 1.13, we're going to end up 1.2, at least 1.25, maybe. So when all the losses come in. So, and I think that performance is pretty typical of most property insurance providers this year. So, again, what happens? We've got all these tools to use. Actuarial tables. We have sophisticated models. I think all of larger insurance companies do, medium and larger. We can model every hurricane with severity and what we're going to lose at any moment along the entire East Coast and Gulf Coast. So that's why in 2005, our CEO was predicting 1.5 billion. That was worst case for Katrina. So anyway, you've got to have that. I mean, that's part of being a, sophisticated company. You just have to use those tools, and they're available. Flood maps are always something we look at with a little skepticism because some of them are old. We have these dam and reservoir failure inundation studies, also provided by FEMA. So we love FEMA. I mean, they should be funded. Most people don't realize what they provide. There's a lot of countries in Europe that don't have flood maps. You find the oldest person and you go, how high did the water get? And that's your flood map. So anyway, and then rainfall, the heavy rainfall events that are happening, not really well understood, and there's not a lot of accurate modeling or statistics. It's still kind of some area of research that really needs some work. And I'll talk about the difference between the two.
Just a quick question. The first slide, you're saying that it's potentially up to 70% of the loss was uninsured. You said 30 to 50%.
Yeah.
Okay.
Yeah. Whoever says, "Oh, well, it'll get paid for and it'll get rebuilt," that's, there are only 5 million flood policies purchased by homes and businesses in the United States. So that's about 20% of the ones that were hit in Houston. Most of those people did not have flood insurance.
Yeah, that just didn't strike home. But I was thinking about it. It was like 70% of the losses are uninsured.
Yeah.
And I was like,
So your basement fills or your first floor, a lot of cases, the first floor fills. You know, you're gonna beg the federal government for some help.
Oh, that's my question, but the federal government will make funds available above and beyond these insurance policies.
It's a grant system, and you can get some money, but usually it's a few $1,000s. It's not gonna cover the whole loss. You're gonna be tearing out drywall yourself, you and your friends, and, yeah.
And it's
So-
not free money either.
Oh, no. Oh, no.
I mean, the citizens are paying.
Yeah, it goes into the negative, our deficit, yeah. I mean, everything, I think of it that way. Every time a hurricane hits, we're increasing our deficit spending. Anyway, this is an insurance magazine. I can't even remember the name of it. Market Intelligence newsletter. Every one of these, usually there's a dozen titles, and you click on them and read them. Every one of them says rates are going up. October, that's the October 23, 2017. Same thing in the October 30th, 2017. Every article, rates are going up. So that's, you know, it's been kind of flat pricing lately, kind of a soft market. So it has an effect. So again, if all the insurance companies are losing money in the same year or a number of years, that cost gets spread around. They try to recover their costs by raising premium, cutting costs, covering less things. The other way, these direct costs, is deficit spending. We're already at 19 trillion, but you know, we're repairing roads and bridges, electric supply lines, substations, damage to government buildings, federal and state. So U.S. federal, state of Florida, Puerto Rico, 36.5 billion. That's what I could get off the internet. That's been approved by Congress already. And then state of Texas got 18.7 billion approved. You know, I guess our president signed off on it. So the point is here, I've gone to a few military production plants, and there's a line drawn. And when the military hardware becomes the property of the U.S. government, it's no longer insured. So the manufacturer's insured, but on that side it isn't. There's no sprinklers on that side usually either. So the federal government does not buy insurance. And all this infrastructure, you know, unless maybe there's a lien on something and a bank makes them. But as far as I know, there's nothing covered. I've dealt with the state a few times, and the state of Michigan's pretty typical. They have insurance on some things, but it's a building that's got a lien on it. So all this damage to public infrastructure, I don't know of many insurance companies that want to touch that. So, do you? Do you guys cover that? Anyway, and then there's the National Flood Insurance Program, and the hit they're taking is 10 to 20 billion this year. Somewhere in between there, it's really up in the air. Again, that's only 1 out of 5 households that needed to have the flood insurance are usually covered.
Are they required to have that insurance somehow?
So, yeah, we'll talk about that. Actually, I've got a slide or two on there, the way that system works. I think this is the next slide. Oh, wanted to digress a little bit. The one heading there, so you've got to go as a governor. You're going to the Congress and you're begging for some money. This article was about the fact that he's getting, this governor of Florida is getting a lot of money, 36.5 for Florida and Puerto Rico. Most of it's going to Florida, but they were omitting about 3.2 billion that he wanted for the agriculture that was destroyed in Florida. The orange trees that were flattened, you know, that were going to have to be replanted. So
Is that
again,
the same Governor Scott that says his
Yeah.
employees can't talk about
Yeah,
money?
that's him. That's why I put him on there. 'Cause I kind of enjoyed.
What it takes.
So, anyway, so the National Flood Insurance Program was set up in 1968. I didn't realize it was that old. But after a series of large losses led private insurance companies to pull out of the flood market. And I'm going to kind of concentrate on the flood because it really scares us, and I'll talk about why. I mean, it scares me personally and the company I work for. So in the 1960s, there were only a few thousand policies. It's limited today. This is what you get. You cover your structure for $250,000 and $100,000 contents, and that's pretty good coverage for most homes. Businesses are limited to a pretty small amount, $500,000 for the structure and $500,000 for the contents. So outside the 100-year flood, the annual policy is less than $400, or about $400. I have paid that when we lived in Benton Valley, and I'll talk about that. But we were outside the 100-year flood. If you're at or inside the 100-year flood, it's more like $4,000. So, again, it's through the federal government. That's who backs it. You can get it through your local agent, or they can set it up. I don't know exactly how that works. But if you have a mortgage and you're within the 100-year, the lender's going to force you to have that flood policy, in addition to your normal, house insurance for fire and everything else.
Can we get a quick description of what the 100-year flood zone is?
Sure. So the 100-year flood is established in the United States. FEMA has maps almost everywhere that shows areas that will flood that are near like the Mississippi River or some other body of water. And there's a 1% chance in any 1 year that the flood will reach that level. So there's maps, and I've got a few of them in this presentation that I can kind of show you. One of downtown Grand Rapids.
Where's that?
Yeah, like that one. So statistically, it should only happen once in 100 years. So once in your lifetime, you should experience that flood. So the thing that grabbed Catherine Condon
Yeah.
was when I described that there are multiple houses. There's 7,000 houses in Houston that flooded 16 months ago before they flooded in Harvey. So there were many more than that, but these 7,000 were just recovering from the rainstorm they had 15 months before that. And now they're taking the drywall out again.
Where was that 100-year flood zone?
So,
I mean, you could, some zones are 500-year flood zones.
Yeah.
Some are 100-year flood zones, so.
yeah, statistically, that's the 100 year. The 500 years is only supposed to happen once every 500 years, so it's that much higher. But anyway, I'll try to talk about the different, just remember there's a flood event and there's a heavy, intense rainstorm event that's different. And it's hard to model that. But this is the flood insurance, and the flood insurance will cover you even if your home isn't anywhere near a flood source and you buy flood insurance and somehow water fills your house from a heavy rainstorm event, which it can, your flood insurance will pay for the damage. So we're up to 5 million properties have flood coverage in the United States through the National Flood Insurance Program, and then they provide $1.2 trillion in coverage. So the federal government would be on the hook if every one of those houses was heavily damaged. But they're spread out throughout the country. These are the losses the National Flood Insurance Program has taken. And the only thing I want to say about this is they still haven't recovered from this year. There's $25 billion in the hole. And the Congress is wrestling now with, okay, we're going to add 10 to 20 billion on there. So they're really, the Congress, as they usually do, unfortunately, they argue over funding and what to do with this debt that the National Flood Insurance Program has built up. So they have to appropriate some more funds.
Are there any years where they have a positive cash flow in the flood insurance?
Yes, they do. And, well, I can talk about that. They do have, most years, they make money, but they don't account for these years. So when the formula, even their own government accounting office has come out with these statistics. We get $1,121 from our people buying flood insurance. They should be getting, this is what they concluded, for the risk, if it was priced by the open market, they should be getting $2,500 to $2,800 for the average policy. So statistically, it's a losing, that's why we don't want to participate in it. I mean, it's just a losing, priced at those levels. So anyway, so they don't, National Flood Insurance, they don't buy reinsurance like the private sector has to. They just count on being able to borrow from the Treasury. So again, like I said, 25 billion after 2005, and then there's going to be at least 10 billion added after this year, and Congress is arguing. I just saw that little article today. It was written a couple days ago. So we're not getting much action about funding the National Flood Insurance Program.
John, I've got a question.
Sure.
Would I be correct in assuming that the federal government is actually subsidizing the people who live in floodplains?
Yeah. Yeah, so this started in '68, and if you think about it, it's enabled people to build and keep building. I mean, Jeb Bush in Florida did the same thing. In 2005, all of a sudden the insurance companies panicked and left Florida. Unless you wanted to pay $4,000 just for house insurance. That didn't even include the flood insurance. They got out and Jeb Bush implemented a state-run insurance company to fill in the gap so people could afford insurance. He went. Luckily, the state of Florida did not have a hurricane for a decade. So he looks like he came out smelling like a rose. But he could have bankrupted the state. I mean, if this would have happened when he still had that program in place, it would have taken the state down. They would have been, I mean, the federal government would have bailed them out, but that's my opinion. But anyway.
So now the private insurance companies have moved back into Florida?
Yes.
And if
So it took them about 5 years.
Why would they move back in?
Well, I think they developed some confidence that, okay, we're not going to have 3 major hurricanes every year, and they did some underwriting things, some got more confidence in the modeling as far as, okay, we need to really look at, like we actually look at, okay, how many clients do we have in Tampa? Well, can we afford to insure more in Tampa? So I think people have gotten more sophisticated about how they look at their risk. So it's that total, you can withstand that as long as you can define it. Okay, we know we're going to lose whatever, 1.5 billion or whatever that number is, and we're fairly confident about it. So I think that's why. Plus the building code has pushed building standards up from wind loads, so you don't get nearly as much wind damage. So it's storm surge and heavy rain that you really, a lot of the damage is, at least in Houston it was, a lot of that was pretty much due to heavy rainstorms. 50 inches of rain over 3 days. It's pretty impressive. Anyway, so this is, I just wanted to kind of bring up a few of these points. I mean, the U.S., like I said kind of at the beginning, we got a lot out there. We've got a very developed infrastructure, and we all like to live at the coast. Or not us in Michigan, but there's a lot of people that love to live near the water. So we have from an insurance standpoint, you look at the United States, hey, high building code standards, flood maps from FEMA, we got these Corps of Engineers doing all this great stuff with dams and flood control projects and really engineering things well. It's a mature property insurance industry and mature infrastructure to encourage more growth. So it should be great for developing, new insurance programs as needed. Again, this is my concern with the National Flood Insurance Program, that it underpriced the risk, so it encouraged people to keep building in areas that they really shouldn't have been building in. Climate change denial has led people to build and move to areas they really probably shouldn't move to. I'm especially concerned, just personally, from, how many retirees are in Florida and what could happen in Florida in the future. And there's a lot of resistance. After Katrina, Louisiana folks voted down, some infrastructure spending to keep the ocean back. So people don't understand that you really have to, if you're not going to do anything about emissions of greenhouse gases, you're going to have to build yourself a huge infrastructure to keep the ocean back. I mean, I just saw on the Weather Channel yesterday about the naval, where's that, Norfolk, Virginia, and they're flooding every time they have a high tide. That naval facility where they build all the ships just floods. So anyway.
And is that really, even though, is that even possible? Would it be reasonable to think that it's actually possible to build your way out, because we don't even know what's next? And
yeah, no, it's.
And how would you do it anyway? If we're not accepting the facts, then how are you going to build to protect against it? We don't know the facts, or we're not assimilating the facts.
As if you can build a wall along the entire East Coast.
Yeah.
Yeah.
And
I don't know.
and probably the insurance companies going back to Florida had something to do with denial of climate, of course, right? And I had a family member who lived on Tortola, whole business there for 24 years, and they never expected to have the 2 hurricanes back to back after they got hit with the eye and everything was gone, everything gone.
Yeah.
Here comes the next, and nobody expected that. So there's going to be a whole lot of nobody imagined or accounted for. So we build for that.
I actually went to a discussion once by a guy who was like an undersecretary of the Army, who actually did talk about wanting to build moats,
Yeah.
and that was hosted at the Ford Library
Continent.
about a year ago. Yeah.
Yeah, unreason.
Yeah.
No.
I couldn't make sense of that.
Makes more sense than George Law.
It will hold the royalty, and the peasants will be left outside the moats. That's just me being a cynic. Anyway, so. So I wanted to talk a little bit about this flooding versus the intense and prolonged rain events that you can have pretty much anywhere, and I have an example in my presentation. But so flooding is pretty straightforward. You're near the Grand River, you're in the flood zone, you're located within the 100-year, close to it. So you have this insurance you have to buy. If you're in this storm surge area for the hurricanes. And other homes, it's optional, so you can buy it. And like I said earlier, it's much cheaper if you're not within the 100-year flood zone or not within this storm surge area along the coast for hurricanes. Stormwater entrance into buildings is much harder to kind of determine the exposure and the extent of the exposure. A lot of it depends on the topography, and all I can say is if your home is in the bowl, if you go out in your front yard and you look, and this is the city of Grand Rapids on the southwest side, the Grand River, and the dark shaded is the 100-year storm. The lighter shading is the 500-year storm. So people are surprised to see that a lot of the west side is within the 500-year. Luckily, the 100-year storm was determined, I think our maps are still 1980 version. So it's contained, the flood walls along the river, the Grand River, contain the 100-year flood, most of the areas, and then it comes out, it spills over the banks once it gets down here near the waste treatment plant.
And where do we build our museum again? I couldn't believe we did that.
Yeah.
I mean, and it wasn't even talked about. It's on the 100-year floodplain, our museum. But
Yeah.
we raised money not we, but we had little kids and families and everybody to be part of that
Yeah.
thing, to where we put our treasures on a 100-year floodplain.
Yeah.
Why?
And the convention center, at least on the convention center, they put the parking on the lowest
Yep.
level. So that's within the 500 year. If it
Yeah.
tops the bank, it's gonna fill that parking structure. And that was intentionally done. So don't park your car down there if it's raining really hard.
And it seems to be an underlying theme that these maps may not be accurate after 1980.
Yeah, so
the 100 years.
these need to be updated with the new rainfall intensity incorporated in them. So if you take the last 30 years or 35 years and incorporate those statistics and those events, well, the 100-year is going to creep up. Like the 500-year level is going to get higher, which means it's going to spread out more broadly. So that's the concern, and that's FEMA's concern. And the way I understand what they wanted, their first request of Grand Rapids is, we want you to build your flood control system to the 100-year plus 3 feet, which is the 500-year. Because they know we're creeping up. And that's what we need to build to be truly resistant, or resilient. We don't, the fathers of Grand Rapids and the powers that be negotiated that down, so they're gonna do something a little bit less. But Grand Rapids is a model city when it comes to preparing for climate change. The fact that the sanitary and storm sewers are separate is like, I mean, most cities are Milwaukee is terrible. They overflow their sanitary system all the time when it rains hard, because they're common systems.
What would it mean to build the city up so that it's appropriate for 100-year plus 3 feet? What do you build?
So that would require that they elevate those walls, make them stronger, elevate them 3 more feet. The park down here, which is, remind me what that park name is?
Millennium Park.
Millennium Park, they built a lot of ponds. They purposely made that lower area, so when this water comes rushing through here, it has some place to spread out, slow down. So it's part of the flood control system. The rest of the money we're gonna spend, the city is gonna, most of it's gonna protect our sewage treatment plant, so the water doesn't come. We don't have it flowing through, because they're separated systems, but it floods from the river back into the system now. So that's what we're concerned with. If the water gets high enough, it'll flood backwards into our sewage treatment plant. So, anyway, this is what we have, in the 80s, and again, FEMA has a limited budget, so they can only update these maps so fast. So, I don't mind paying my taxes.
Is there
For
any
a lot of
political reason for not updating the maps?
Yeah, because you see no evil. We don't want to know. I mean,
But private corporations can't afford that. Insurance
Oh.
company can't afford to do that.
no, there's a lot of insurance companies that are working on models. We've got a model that tries to model, we'd love to have something in Europe, so we've come up with this computer program that'll model rainstorms and intensities and take climate into consideration and come up with something, because some countries you have nothing, and we do try to insure worldwide. So it's tough to get something that's accurate.
Do they put global warming into the model so that, in fact, they will get worse storms than they had in the past? If they rely on the past, they may be really inaccurate.
Yeah. So you can adjust for that by using the near history instead of taking, everything you have. So you can do that.
But do they do that?
Well,
You're starting to.
yeah, we look at things that way, that we're looking at, okay, we're trying to go to that worst case. We're not trying to, say the sky is falling, but we want to try to model it accurate.
But if the government was to price flood insurance at a break-even rate, a lot of people would be unable to live and unable to sell the houses they're in. I mean, is that the implication?
They wouldn't be able to afford the insurance.
Yes, that's what I mean,
necessarily.
they can't afford to live there,
Yeah.
but nor can they actually sell the houses they're unsellable.
Yeah, if you, and the government, well, I've got a couple slides on that. The government is trying to help. No, that's good questions. You guys are, this is one we paid for, just want to mention. Heavy rainstorm, not a flood. Why do hospitals always make this nice flowing driveway that comes right into their basement? But anyway, and then they put the MRI or whatever, their expensive equipment, in the bottom. But that happened in August of 2015. Yeah, just, I don't know, 12 inches of rain. 12 inches of storm water got into the basement. Not near a river or anything, just heavy rainstorm overwhelmed the storm drainage system. And this is why. Rooftop design is the 100-year, now think of this, that's what the difference between flood and, when you hear these rainfall intensity, 100-year rainstorm, well, it's always over a duration. You gotta say 100-year rainstorm over an hour, or over 24, or over 6 hours, or whatever. So, in the state of Michigan, this is the design you have to meet for your rooftops. Get your water off your flat roof. Drainage has to be designed for 3 inches per hour in most of the state. 2.75 inches per hour is up in northern half of the lower peninsula. The storm drainage design at grade, you only have to cover 100-year, this is the good system. 24-hour duration is 6 inches in 24 hours. So you can get it off your roof. You don't hear about buildings collapse, but it gets down around on the ground level, and the ground's saturated, where's it gonna go? Into the bowl.
Into the rivers.
So it tries to get to the river, but before it gets to the river, you might be the low point.
Unless there are enough rain gardens. Unless rain gardens are how people manage their, instead of a lawn.
Absolutely. I've got a backyard that you would be impressed with.
I've got a front yard, you would be. I'd be, come on over here.
Okay, we'll have coffee. Okay, we'll do that.
Oh, yeah.
Right. So anyway, just keep that in mind. So people think, well, the government didn't design the drainage system big enough. Well, you can't design a drainage system for that. I mean, that'd be whatever 3 times 24 is, but it would be a huge system. You'd be enlarging the pipes exponentially. So again, it's tax money. You know, if you give me an infinite amount of money, I can give you an infinitely large reservoir, an infinitely large storm drainage system. But otherwise, we have to go with what we have. So the indirect costs, I just want to mention this. Building materials are going through the roof. The price of oriented strand board is going through the roof. And it takes a while. After these events, it doesn't happen like overnight. The demand goes up. Pella windows are raising their prices 3% next Tuesday. So anyway, but it's hard to get people to build because a lot of them had gone down there. The people in Houston were complaining that all the construction workers were going to Florida because they could make more money. So it's a limited resource to rebuild these properties, even if you have insurance, flood insurance to cover them. And then this is the thing that really concerns me. Buying back properties in flood-prone areas, the severe repetitive loss properties, it's cheaper to just buy them. Yes?
Yeah, I read something recently about the bond markets in places that have been rebuilt, say, after Sandy, and how they were still getting AAA ratings, and they were trying to say that, you know, it's the areas that haven't been hit, or that, it was confusing. I was having a hard time understanding it, but it was a fascinating thing to see that they're giving places that have been rebuilt and might still get hit in the future, AAA bond ratings.
So they were in the storm surge area versus wind? Or, the storm surge is a different thing. You really can't design.
Yeah, no, I don't think this was storm surge. I think this was just areas that have been rebuilt along the coast.
Okay.
In places like New Jersey or Florida,
Okay.
things, but I could be wrong.
Yeah. Well,
But
hopefully,
interesting article.
I mean, the bigger companies are gonna be sophisticated enough to know, the accuracy of some of these ratings, so, I mean, hopefully they take more into consideration. So, again, I wanted to just mention one thing, like that I can't believe, I looked this up, it was just February of 2017, that Oroville Dam Reservoir in California was overflowing. And okay, again, you're building something to the maximum you ever think possible you'd have to lose. Well, it almost failed. Again, give me an infinite amount of money, and I'll give you infinite protection. The Corps of Engineers, when I joined this company 33 years ago, they were talking about Win New Orleans with the flood, because everybody knew it was built to a 1 to 2 category hurricane. Again, a limited amount of money.
John,
Yep.
would you amplify a little bit on point 4? What your concern is that there are no policies, and I don't mean necessarily insurance policies, but government policies that mitigate against that?
Well, no, there's grant money.
That allows
Good
people to
question.
rebuild?
No, well, yeah, there's a little bit of grant money available to rebuild, but I thought you were asking about buying properties.
Oh, yeah, buying, but you're buying them
Not to
with the intent to build, right?
No.
Oh.
So you're buying, here's an example from 2008. I didn't put this in here so you guys could read it. That's why I could read it to you. $3 billion in funding from the federal and state government was spent in Cedar Rapids, Iowa. And they bought 1,000 properties that had been repetitively flooded. And this is not the Mississippi. This is the Cedar River.
But what was the purpose of buying them? I don't.
Turn it into park.
Oh.
It is undefendable. It is not, well, not undefendable. Everything's defendable. You can build a nuclear reactor to protect your property, the shell. But it's not economically viable. If you're paying for these repetitive losses, it's better just to buy the property
To
from the
accept
federal
reality,
government
Accept
standpoint.
reality and let be what should be
Yeah.
instead of
Yeah. So that's
Screwing up again.
that's what's been going on. I mean, Governor of New Jersey did that. After Sandy hit, there were some islands, I have a picture. He had to buy those, 25, 30 homes that sit on those little barrier islands, because the island there was hardly any sand left above the water surface, so, after the storm. So it's a concern. It's like, how do you price that? Okay, you flooded 5 times in 10 years. What's that property worth? Are you trying to give somebody a fair price? Or are you just trying to, give them enough to get them a start someplace else? So what's fair? And this is just gonna expand. Again, this is the Cedar River going through Cedar Rapids. And there's the flood map, the FEMA flood map that shows the 500 year and the 100 year. So it covers quite a wide area. Again, a lot of those properties were built, they were there for decades and decades, built before we really thought about flooding much and where we should be building. So there's the barrier islands after Sandy, one of them. So, and the governor or somebody has to pursue that. State or local officials have to go for that grant money to buy those properties.
So they have to buy them back because they're holding the flood insurance on them. Is that what you're saying?
No.
No.
They're not, it's just what do we do? These people, they may have had flood insurance, they may not have had flood insurance.
Okay, so the impetus wasn't the fact that they were losing too much by providing the flood insurance to the homes. it was just a pure, we need to move this population away from here.
Yep.
But my understanding in Florida is that they're allowing people to go back to the barrier islands and rebuild.
Yeah, well, it's that property tax base.
Key West
It's all,
John, we better move to Q and A.
okay. All right.
It's great.
I have no
Tell that
filter.
information.
But anyway, so, one more thing here. So again, how did we get here? Again, this is my take, and I'm gonna tell a quick little story. We're standing in Ireland on the cliffs of Moher, and I asked the tour guide, why are all the houses up there? They're 100 yards up here, and there are the cows and the sheep have the good view at the edge of the cliff. He goes, well, because storms come. We don't build right on the water. Yeah. So anyway, I just was like, okay, we're put in my place. Anyway, I mean, no, I didn't say it that way, but I just felt that way because of the way we do things here in the United States.
We understand, he could have just said, we understand how nature works, don't you?
Yeah.
I mean,
One of those
can't we start
remnants of a
asking-
hurricane went up into Ireland, in England, just this year. So it hung together for quite a while. Netherlands, of course, focuses on prevention, infrastructure, to keep keep the water out. And Germany has a well established insurance program. But anyway, these are we have this optimistic outlook. Maybe it's just because our ancestors got in a boat and came across the ocean with nothing. And they just think everything's gonna work out. But build, baby, build has gotta stop. Okay, democracy is trying to respond to the demands of people, live where we wanna live. That's led us down this road. And then again, government tries to help people to get back on their feet. Well, maybe we shouldn't help them to rebuild where they are. And then bad decisions. And it depends on the infinite borrowing power of the US government, which is the biggest concern. So anyway, questions?
If I recall correctly, it seems to me that years ago, there was a lot of conversation here in Michigan about people not building on the floodplains. And they were, and I don't know exactly how that would work, but there were going to be restrictions, and I don't know whether it was going to be on the state level or local level, but it's hard to believe the state would do it, but just zoning out those areas for building. So yeah, I mean, there are lots of property on the floodplains, and so, there are farms and things like that.
Yep.
So what do you do if they want to sell it for development? Basically, you can just, if you have a township or a city that is enlightened about floods, you say, we're going to keep this as a floodplain. They don't build in a floodplain. Now, I don't know where it happened to that, but that was many years ago.
Well, I think almost anywhere in this country, you're really hard pressed to build, at least within the 100-year floodplain anymore. When we had a house built in Kentwood near Plaster Creek, the rules said you have to build, we weren't in the 100-year or the 500-year, but you cannot have any openings that are lower than the 500-year flood level. So I couldn't have a walkout basement. I could only have daylight.
That's how they do it with those kind of
Yes.
regulations. Yeah.
So again, the building codes have gotten tougher, and unfortunately, this is kind of the backlash against government. Why are they making me do that? It's a lack of understanding of people. Why? They're just trying to keep you from making bad decisions.
Well, not that, it's not people because they want to get bailed out.
Well, yeah,
They
so
want to get
if you
bailed
own a piece of property, it's been there for 100 years, and, what do you do? They expect the government to buy them at full value. And it's like, well, wait a minute, if the thing's been hit 5 times in 10 years, I'd say the value has gone down, in all honesty. So
how do you talk to policymakers, politicians? That second point about democracy. We often think about our rights without our responsibilities. That is, we don't know how to talk about risk very well in the public area.
Yeah.
It's almost like like a permissive parents.
Or
Yeah,
Hard to
it's
say
an
no.
enabling
Yeah,
thing. I would use that word about the National Flood Insurance Program. It enabled people to keep building, and unfortunately, you see, after these storms, we're gonna rebuild. You know,
how do
it's
you,
like-
the question is, how do you get that conversation going in a way that people begin, because I don't hear any conversation like that. I don't read about it.
Yeah.
The kind of risk analysis you're talking about.
I think sometimes you do hear it though, because like in conservative circles, you hear a lot of critique of FEMA, and they don't want people, they want people to have to pay for their own mistakes. And so I think that is something you hear. That they want, yeah, right?
Yeah, that's, I think, in essence, that's in the nutshell, that is the backlash against high taxes.
Yeah.
Everybody should be more independent and more self-sustaining and live with their own mistakes. I mean, that's what it sounds like to me,
Yeah.
but.
So it seems like, in a way, either extreme is better, right? Like, either you're allowed to make stupid decisions, but you have to bear the consequences, or you're not allowed to make stupid decisions, and the government will bear the consequences.
Yeah, but there's no,
But the in-between, where we're at right now, was where you are allowed to make stupid decisions, but the government will pay for your stupid decisions. That's the worst point, right?
But
It's the worst of both sides.
It's the magnitude of the issue going forward and the morality
Yeah.
that comes into play there too. And, that's where, I don't think conservatives really have an answer. Just to say, pay for your own mistakes, well, as more and more and more and more people end up having to suffer, something, Jesus.
One, it's not.
Jesus
it's not-
has
yeah.
to show up at some point.
Yeah, for one, it's not practical for everyone to pay for their own mistakes. It has a tremendous cost in society. And the fact is that when it really comes down to it, it's fine if you pay for your mistakes, but I'm not paying for my mistakes.
Right. Yep.
So,
Well, just like at Florida and Texas, when they had those huge storms, those are states that didn't want government interference, but suddenly they want government help.
yeah.
Yeah.
Well, the Texans all voted against funding Sandy.
That's right, that's right.
And
the politicians.
Yes.
No, the
Texas.
politicians,
Congress.
yeah, they're represented in Congress,
Right.
voted against it, but they didn't vote against the subsidies for Houston. That's strange, did you think?
Well,
Yeah,
the
didn't
question
the
Mark
governor
has
of
is-
Texas also not
Governor
want to
will-
open a rainy day fund for Houston? He didn't want to tap their rainy day
No,
fund.
why should you?
But the question Mark has is, you believe that when push comes to shove, when 6 feet of water comes into Houston, you think the government will pay. And actually, you're right. The government has, if you like, caved or been permissive of this. So betting on moral hazard still works. I mean, big banks, well, big industry the same way, that when times are good, it's all private sector. When things are bad, it's time for government intervention. There's a hypocrisy here in the language that goes on compared to, say, European countries. Netherlands and Germany are very clear that regulation, they are strong on regulation, consequences to go with it, and profits are less because of it. But you're pointing to an inequity here. You're basically kicking the can down the road financially with the moral hazard that goes here by saying someone in the future will pay here.
Yep.
But the trends are also going the wrong way. The numbers are getting bigger. It's not like we're going to grow way out of this.
Yep.
As severe weather events become more frequent, we're actually multiplying the events.
Yes.
Yeah, the hazard.
Yep. So it's going to add, I mean, when you look at these numbers, the one point I want to make about California, the California numbers look big for those fires, and they were devastating. But $5 billion is not scary to most insurance companies. And that's what the fire, and most of those fire losses are covered because they have fire insurance. These numbers are scary for these these hurricane events. And it's flood insurance. And only 1/5 of 20% of the people actually have flood insurance. So it's not covered. There are some people that will not, they'll have to fix their own houses and pay out of the pocket and refinance or whatever. A lot of people will have to do that. And if they're lucky, the government, those 7,000 homes in Houston, they'll come in and they'll buy all those properties. And then you'll be one of the lucky ones, you'll be out of that area. But it's been huge development in those areas. Yep.
I'm thinking of a regular person, like in Grand Rapids, who might, like where you live on kind of high ground, should we be looking at buying flood insurance for storms or?
So when I was in Kentwood and I was close enough to the Plaster Creek, I bought flood insurance once I finished my basement, so I've had it for 5 years. In my present home, I'm up high. I do have 2 yards, 3 yards that flow towards me. So I've actually gone the opposite way. I put in an engineered design system at 3 inches per hour that can take all the water that comes at me, calculated based on that square footage that's behind me flowing towards me, and it'll take it out to the front yard. Because I got plenty of fall in the front yard, it just gets trapped in the backyard. So I have not bought flood insurance for my house. I'm nowhere close to any river or whatever, and there's a gravity tank like a quarter mile away, so I'm at the highest point in the area. So I'd look at what you have and, evaluate what you would feel comfortable with. If you're not in the 100-year flood zone, it's $400 a year. So for peace of mind, it might be, if you've had water approach doorways, windows, the first thing I did was put glass block in all my basement windows. And then put the drainage system in. And my neighbors thought I was burying bodies in the backyard. What are you doing? Nobody's died. I'm fixing the problem in this, like in East, all the other houses are 1950s. My house happened to be newer, but it was an empty lot, so everybody else kind of tipped their backyards into the empty lot that was there. So anyway, so I had to solve the problem. Anyways.
It's getting late, we want to be here, we want to hear this.
Oh, well, this is just again, that's exactly the point I just talked about. You buy insurance, or you do some physical engineered kind of arrangements to minimize, your exposure. So again, it's kind of two, you can use them both, you can blend them together to make yourself more resilient, to make your property more resilient, to make your country more resilient. So we should be doing this, and as far as I'm concerned, the Corps of Engineers does this. I mean, they're on this issue. It's a matter of money. We can't make New Orleans, now the levees are built to almost a class 3, category 3 hurricane, but, hopefully it doesn't hit anytime soon, but the odds are it's going to get more frequent and at least the severity.
Yeah, and guess who can't do either of those things? It's poor people.
Yeah.
So they're the ones that.
Exactly. Yeah. Yeah, those folks without flood insurance down there, and all their
They
stuff
move
sitting
into
out on
those
the
houses.
sidewalk,
Yeah.
out on the curb. Yeah, let's not be delusional about it. Anyway.
Here's a timely little article I thought I'd show you because
Oh,
you're
okay.
right, it's just gonna get more pronounced and there's gonna be more flooding because that's happening right now.
Yeah. Melting glaciers, yeah.
That
Yeah.
was just yesterday.
Yeah. Take a look at this. Yeah, the folks they interviewed at the Naval, in Norfolk, they had admitted that, other people are trying to silence them. Well, we have to shut the power off because the tide flows into the transformers.
Wow.
And it happens almost every day. So, and it's calm weather. So yeah, it's a huge problem. And that infrastructure is not insured. We will pay for it, you and I, taxpayers.
Can you give your closing comments? And I suggest then that people want to stay for more questions, please do so. But if you need to leave, maybe drown your sorrows with beer instead of water.
Yeah.
But
I didn't have much
closing
good
comments,
news.
please. Yeah.
One last comment, a good note. Babcock Ranch in Florida is the largest community in the world, just finished, that is solar panel. You should see the impressive size of their solar field. So people are getting it, but it's going to, private industry is going, communities are going, trying to be, limit their carbon footprint and zero out their carbon footprint. That's what we need to do. So, thank you for your attention.
Excellent job. If you haven't signed in